Hey everyone, Coach Investor back to another video for today. So let's talk about Apple. They had their big day on Tuesday, made a couple of announcements that, well, weren't that groundbreaking. Let's be honest. They showed us Mother Nature. They talked a long time about how they're making the planet a bit better. They are reducing their carbon footprint, etc., etc. They also announced, by the way, the new iPhone 15, new iPhone 15 Pro, what has changed from the 14, 13, 12, 11. To be honest, not that much, but finally they've joined the rest of the world by putting in a USB-C. Thank God, now you have one cable to charge all your devices. Pretty groundbreaking stuff from Apple. Of course, they also talked about the Vision Pro, which will be releasing early 2024, will only cost you $3,000 or so. By the way, Meta Quest 3 is releasing in a couple of weeks, will cost you $500. Whether the difference is worth 6 times the price remains to be seen. Now, with regards to Apple as an investment, I'm not gonna lie, it's been one of the best investments out there because, well, one, it changed basically the way we work each and every day, changed the way we communicate each and every day, whether it's through the iPhone, the iPod, the iPad, the MacBooks, AirPods, you name it. They created an incredible ecosystem, probably one of the best ever. And this is why the company has reached such high highs. $3 trillion in valuation, now 2.7 because of the concerns of, well, the Chinese market, etc., etc. But I think that them growing now much faster and producing in India will probably help them more than the hit in China will hurt them. That said, currently Apple is pretty expensive. We're going to see why. So I posted this on X yesterday. This is Apple's investment thesis in one picture. Let's dive a bit deeper. We're here on Koifin. Most of you ask me every time what platform this is. This is Koifin. Link is in the description and in the pinned comment. If you want to use my link, you get 20% off if you go premium. So Apple, $2.75 trillion in market cap, forward PE of 27.5 times. Now, you might say, okay, lots of tech companies are trading at those multiples even higher. Yes, that is true, but most tech companies that are trading around that are also growing faster than Apple. Now, why has Apple been such a great investment in the last decade or more? This graph shows you the last 10 years. Is exactly because of this. Look at shares outstanding. Since 2013 up until now, they have reduced that by 38.54%. If you look at free cash flow per share, that has increased to 186.7%. Now, we've talked about the magic of share buybacks before, but if you want a small reminder here, this is exactly what happens. So this is by Monish Pabrai. Shares bought back, let's call 50% here. Return without a change in earnings or PE multiple, you're up 2x. If you look at 80% share buyback, of course, not a lot of companies can do that, but you're already at 5x. So yes, there is some magic behind buying back a lot of shares. And this is exactly what has happened throughout the years for Apple. Yes, it has grown as a company, it has become more profitable, free cash flow has gone up as well. But you can clearly see here that there is a deceleration in growth in buybacks of shares. Why is that? Well, as the company is not able to grow as fast as before, it will not be able to buy back as many shares as before either. I mean, look at underneath here, the EPS estimate for the 5-year growth rates. We're now sitting just over 10%. I mean, for a company like Apple, 27.5 times forward PE, this is not tremendous growth. And so many people are saying right now, Apple has been a great investment in the past, currently close to $3 trillion in market cap, seeing what everything's been happening with the company, such as the last quarter, right? Net sales is down, iPhone sales down, Mac sales down, iPad down, wearables is up a little bit, but yes, services, which is of course higher margins, is up and doing quite well. But overall, people are starting to look at Apple and say, there are probably much better opportunities out there. Yes, it is pretty safe to go with Apple. It's like putting your cash in a savings account at this point. Now, if we add Google to the equation here, we can look at Google as right now maybe a much better alternative to Apple. In the last 5 years here, yes, of course, if we look at the last 10 years, Apple still beats Google here, but looking at the last 5 years, we can even look at the last 3 years later on if we want to, but we can clearly see that Google is now able to buy back more shares at a rapid pace. Free cash flow is growing also faster. Yes, of course, these last 2 years we've had the deceleration in the advertising market, but as we've seen in the last quarter, Google is now back on track. We look at the EPS forward growth here, much higher than Apple as well, 17.29% compared to 10.53% of Apple. Now, looking at Apple in the last 10 years when it comes to PE, EV to EBITDA, price to sales in the next 12 months, and price to free cash flow in the last 12 months, you can clearly see what has happened here. Currently, the stock has gone up much faster than the underlying business, and that's why most of these, actually all of these metrics, are now more expensive than its mean in the last 10 years. PE is now 27.5 times compared to 18.8 times. EV to EBITDA 21 times compared to 12.2 times. Price to sales 6.9 times compared to 4.2. Price to free cash flow in the last 12 months 27.3 times compared to 17.5 times. And you have to understand that when this happens, usually this is because a company is now growing much faster than before. But as we've seen, this company is not growing much faster than before, and yet its stock is much more expensive than before. And this is when people start to think, yes, maybe my money should be put to work in another company. Now, of course, I'll have to repeat myself. Apple is still a tremendous business. But if growth is not reaccelerating from here, from an investment standpoint, it just doesn't make any sense to buy Apple right now. Still a great company, still provides great services, great products. I mean, look at those numbers you can see right now on the screen for the last 10 years. This is an incredible business, probably one of the best ever created. But right now, September 2023, would you be buying Apple when you know you get the chance to buy other great companies that are growing faster, that are also extremely profitable, can buy back more shares right now, more free cash flow, etc., etc.? I mean, in my opinion, I think the answer is pretty clear here. But of course, do share your thoughts down in the comments below. Are you a buyer of Apple? Do you agree with what I said in this video? Are you going to buy the new iPhone 15, iPhone 15 Pro? Let me know down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.